The market is currently closed as of the last trading session on Friday, March 20, 2026 at 4 p.m. EST. NUBURU Inc., trading under the ticker symbol BURU, closed at $0.2059 per share, marking a significant intraday climb of 16.39% from its previous close. While the surface-level narrative suggests a struggling penny stock fighting for its life, the reality beneath the hood reveals a company in the middle of a high-stakes total business transformation. Most investors looking at the ticker today see the 52-week high of $4.24 and assume the story is over. However, the unexpected development is that NUBURU is no longer just a laser company. It is effectively pivoted into a dual-use defense and security platform, and it is doing so through aggressive, non-dilutive asset consolidation and strategic European acquisitions. This isn't just a pivot in name. They are currently executing on a massive industrial deployment platform in Ukraine with their partner Tekne, targeting an annual program scale of 80 to 120 million euro. The expectation was that NUBURU would simply fade away under the weight of its legacy debt, but the reality is they've cleared $17 million in obligations and are now entering a revenue-generating phase that the market hasn't fully priced in. If you're tracking the recent momentum, you've noticed that the trading volume has been absolutely explosive. We saw over 72 million shares change hands in the last session alone, which is nearly double the recent daily average. This kind of liquidity surge often signals that institutional eyes are starting to move back into the name, following the reverse stock split they executed in late February. You have to remember that just a few weeks ago, this stock was trading below the 10-cent mark, facing immediate delisting. By pulling off a 1 for 4.99 reverse split and closing a $12 million public offering, they didn't just survive, they reset the board. When you look at the institutional activity from the end of last year, you see heavyweights like Vanguard and State Street holding positions. Even though the retail crowd is often distracted by the flashy volatility on the Robinhood app, we're looking for quick gains on SoFi Invest. The smart money is watching how NUBURU integrates its new Italian acquisitions like Lyocon and Tekne. The tension in the BURU story right now is between the historical revenue drought and the 2026 revenue transition milestones. For the last couple of years, NUBURU's income statement was frankly a disaster. We're talking about revenue that collapsed to nearly zero as they shifted away from a licensing model. The market's expectation is that they will stay stuck in this drought. But the reality is that the production ramp for their blue laser systems is already live. They recently activated a ramp for 40 high-power systems for a Dutch agri-tech firm, Tribotics, which serves as a proof of concept for their scalable industrial execution. More importantly, they've just reactivated their 70% acquisition of Tekne. This is a big deal because Tekne is targeting 50 million euro in revenue for 2026 alone, with a path to double that in 2027. If NUBURU successfully consolidates these numbers, the current market cap of roughly $22 million starts to look fundamentally disconnected from the projected top line. When we talk about the technology itself, we have to look at why blue lasers matter compared to the standard infrared lasers you'll find in most industrial settings. Blue light is absorbed by non-ferrous metals like copper and aluminum much more efficiently than infrared. This is the unfair advantage NUBURU has in the electric vehicle battery sector and defense sectors. In the defense space, they are moving into directed energy counter-drone systems. Their subsidiary Lyocon just finished a proof of concept for a portable laser dazzler designed to take out UAS threats. This puts them directly in a market that's expected to blow past $20 billion by 2030. While some investors are still trying to figure out how to navigate self-investing through a traditional individual brokerage or a fidelity trading platform, the real opportunity here is in understanding the shift from industrial hardware to a software-orchestrated defense ecosystem. Now, let's talk about the risks, because with a stock at 20 cents, they are substantial. The common ground belief is that another round of dilution is inevitable. Management recently had to issue a letter to shareholders to clarify that their new authorization for private placements is a regulatory flexibility tool, not an immediate plan to dump shares. They are trying to walk a very fine line between needing capital to fund acquisitions and keeping the existing shareholder base from revolting. If they can't hit their Phase 1 revenue targets of 5 to 10 million euro from the Ukraine project soon, the market will likely lose patience. This is where the expectation of a transition year meets the hard reality of the balance sheet. They have a current ratio that historically has been quite low, meaning their short-term obligations have often outweighed their liquid assets. The $12 million raise in February gave them oxygen, but it's not a permanent solution. Institutional interest is the anchor here. If you look at the filings, institutional ownership actually jumped from about 5% to nearly 27% toward the end of last year. That's a massive move for a microcap. It tells me that there's a group of professional investors who see NUBURU as a call option on the future of directed energy defense. Whether you're using interactive brokers for its low fees or the Robinhood app for its simplicity, you're essentially betting on whether Alessandro Zamboni and his team can execute on the Maddox Defense joint venture and the Orbit Sauce integration. They are trying to build a vertically integrated defense tech firm out of the ashes of a laser startup. It's ambitious, it's risky, and it's why the stock is swinging 16% in a single day. I want to hear your take on this because the community sentiment is split right down the middle. Comment below how many shares of BURU you currently hold, or if you're waiting for the 10K filing to see the actual revenue numbers before you jump in. Do you think the pivot to defense is a genuine move or just a way to catch the current market hype on military tech? Looking ahead, the next few months are the ultimate put-up-or-shut-up period for NUBURU. They have the Italian Golden Power authorization filing coming up in April for the Tekne deal. If that gets blocked or delayed, the stock could easily give back all its recent gains. If it goes through, they officially become a mid-sized defense player with real manufacturing assets in Europe. We also have to watch the NYSE American compliance. They are currently back above the minimum price requirement thanks to the split, but they don't have many lives left if they dip back toward 10 cents. The restricted ability to do another reverse split means the price action here is truly do or die. To summarize the situation, the market expectation is that NUBURU is a legacy laser firm with zero revenue and high dilution risk. The reality we're seeing in the data is a company that has restructured its debt, acquired revenue-generating defense assets, and entered the production phase for a massive international defense contract. The contrast between these two views is why we're seeing such high volatility and volume. If you're a self-investing advocate or looking for investment help on these microcaps, you have to realize that NUBURU is no longer the company it was in 2024. It's a completely different animal now, focused on non-kinetic effects and software-enabled defense. Whether they can bridge the gap between their ambitious targets and their current cash position is the million-dollar question. The authority in this trade comes from watching the revenue consolidation of Tekne and Orbit over the next 2 quarters. If those numbers hit the tape, the current valuation will likely be a thing of the past. Would you like me to analyze the recent institutional buy-in patterns for NUBURU to see which funds are increasing their stakes?